2025 is not the year to wait. It's the year to act decisively. In a world undergoing massive transformation, some stocks don't just offer returns. They give you the chance to be part of revolutions in technology, healthcare, and energy. This is the moment to look beyond charts, beyond headlines, and beyond the crowd. Not every stock deserves a place in your portfolio, but the 7 you're about to discover do, and they could be the turning point on your path to long-term wealth and significance. Now, let's dive into each of these stocks, where value isn't measured by share price, but by the future they're building. Biotechnology is no longer a risky playground for bold speculators. It's the infrastructure of tomorrow. As companies move from symptom treatment to gene-level intervention, investing isn't just about profits, it's about impact. This is where science meets finance, where capital flows to those brave enough to lead. Today's biotech disruptors are tomorrow's Apple and Tesla. Smart investors recognize this long before the masses do. Opportunities don't come from what's obvious. They emerge from what's forming. In biotech, companies with FDA-approved products, clear market potential, and robust pipelines stand at the edge of transformation. They're targeting rare and genetic diseases, markets with endless need and minimal competition. Every scientific breakthrough is a leap in revenue. And it's not just about sales, it's about setting new standards in global treatment. Investors don't chase after science, they invest in the future of humanity. The biggest differentiator in biotech is its non-financial leverage. A single clinical success can multiply market cap. But to win, you must look beyond balance sheets. You must see strategic alliances, regulatory trends, and unaddressed medical gaps. Imagine investing in a company that not only saves lives, but reshapes global healthcare protocols. That's not just buying a stock, that's buying into history. A leading biotech company is revolutionizing cystic fibrosis treatment. With a proven blockbuster product, it dominates its segment and generates billions annually. This cash flow funds R&D without dilution or debt, creating a rare financial foundation for sustainable growth. Their culture is relentless. Innovate, expand, repeat. It's not hype, it's DNA deep strategy. They're not stopping at treating symptoms. They're stepping into gene-level cures. Strategic alliances with CRISPR giants unlock a new frontier, correcting inherited diseases at the DNA source. What once seemed impossible is becoming a clinical reality. This isn't just better treatment, it's potential eradication. And investors who recognize that are not just betting on growth, they're owning a piece of medical evolution. Their pipeline expansion is aggressive and diversified. No reliance on a single product. Multiple treatments are in late-stage trials with commercial potential. The company is constructing a biotech empire, not just a business. Add in robust finances, visionary leadership, and industry tailwinds, and you have a rare compound of science, scale, and stability. This is not a choice, it's a defining opportunity for those who see what's next. Some stocks were once written off due to mounting losses in R&D. But when success hits, everything changes. This company emerged from near collapse through a multiple sclerosis breakthrough. MS is a $30+ billion global market, accelerating with an aging population. Few had the courage to burn capital for years. But when it works, returns can multiply tenfold. The competitive edge is not just clinical, it's patient-centered. Faster infusions, fewer side effects, stronger efficacy. Forecasts show a 64% revenue spike in a single year. This is no longer speculation. This is a true growth engine, and the best part, the company has reached profitability, real profits, real cash. That changes everything for cautious investors on the sidelines. This isn't a one-hit wonder. With renewed cash flow, the company is expanding research into new indications. A new wave is forming, and early investors stand at the front line. This is no longer a gamble, it's a strategic position in a company setting new neurological treatment standards. The market hasn't fully priced it in yet, but those who act now will be remembered as visionaries. In the turbulent world of biotech, a few companies choose a different path: multiple revenue pillars, diversified products, and segmented markets. One standout player is tapping both blood cancer treatments and dermatology, two global markets worth hundreds of billions. What's remarkable is that both of their flagship products are already commercialized and generating stable revenue. While others chase trial results, they've already secured market share. For investors, this level of predictability is not just comforting. It's a financial bedrock for long-term capital appreciation, especially in a sector known for high risk. Their blood cancer drug, now considered a standard of care, pulls in billions annually and has strong support among physicians. Meanwhile, their topical vitiligo treatment is the first FDA-approved solution for a condition affecting millions worldwide. That means they aren't just another player. They're the pioneer. In dermatology alone, a $47 billion global market awaits. They opened the door first. And that wasn't luck. It was strategic foresight and clinical rigor. When a company defines a category, they don't chase market share. They own it. And investors who see this get rewarded with both margin and momentum. The true strength lies in their development pipeline. They're not relying on two products. They're already in advanced trials for multiple new indications. With stable revenue, controlled R&D costs, and a growing surplus, they're perfectly positioned for scalable, low-risk expansion. In a volatile industry, this company offers rare equilibrium: strong legacy products, pipeline innovation, and defensive financials. For investors seeking a balanced approach, one that marries growth with consistency. This is not just a biotech pick. It's a portfolio cornerstone. One that doesn't just survive volatility, but thrives because of it. As the world accelerates toward net zero, aluminum has emerged as an unlikely star. Lightweight, durable, and infinitely recyclable, it's now essential to electric vehicles, solar energy, and sustainable architecture. One industrial giant, once challenged by commodity cycles, is staging a powerful comeback. Repositioned as a pillar of the green economy, it's poised to lead a global industrial transformation. With projected earnings growth of 314%, this isn't just a resurgence, it's a redefinition. For investors, it's a chance to invest in a legacy material that's found new life as an environmental and economic engine. Beyond demand tailwinds, this company has taken control of its future by acquiring a key supplier in its value chain. The acquisition of alumina secures upstream inputs, cuts costs, and boosts operational efficiency. In the world of materials, those who control inputs dominate pricing power. This company is doing just that, fast and decisively. Vertical integration isn't just a business move, it's a strategic moat, one that enhances profit margins, reduces volatility, and positions the company as a master of both production and pricing. That's how industrial players become investment legends. One more reason it stands out: it pays dividends. Unlike many high-growth peers, this company offers quarterly income while riding a long-term growth wave. Even in cyclical downturns, investors get paid. Combine that with ESG alignment, institutional interest, and strong fundamentals, and this becomes more than a stock. It's a high-conviction, income-generating, sustainability-aligned investment. In a world seeking clean energy, green construction, and resilient supply chains, aluminum isn't basic, it's strategic. And this company is writing its second act. For investors, the message is clear. It's time to take materials seriously, again. In a field dominated by biotech giants, some smaller companies quietly lead in highly specialized, high-barrier niches. One standout is pioneering autologous cell therapies, where a patient's own cells are used to repair damaged tissue. They don't compete on scale, they compete on depth. And in medical segments where outcomes matter more than cost, that's a competitive edge that's nearly impossible to replicate. This is not about volume, it's about precision. And in markets like trauma, orthopedics, and critical care, precision doesn't just heal patients, it builds durable financial moats. Their flagship cartilage repair treatment is favored by athletes, patients who demand fast recovery, high performance, and proven results. Another product, designed for severe burn victims, addresses a medical category that few companies are capable of serving. In both cases, the company faces limited direct competition. That translates into premium pricing, customer loyalty, and sustained market share. They're not just participating in healthcare, they're shaping specialized markets from the inside out. For investors, this is a rare combination of scientific rigor, market exclusivity, and unmet clinical need. And that's a formula for exponential growth. Despite its smaller size, the company is scaling efficiently, posting 23% annual revenue growth and expanding its clinical partnerships. Strategic collaborations with hospitals and targeted marketing are driving adoption. Every new treatment center added is a new revenue engine. For investors with an appetite for asymmetric upside, this is a golden opportunity. Small-cap biotech isn't about hype, it's about timing and traction. When science meets execution, the result isn't just innovation, it's acceleration. And this company is built for both. Sometimes the most valuable gems aren't on the surface. They're waiting to be uncovered by those who look deeper. Healthcare is entering a new era, where artificial intelligence is not just an assistant, but a leader in diagnostics. A company in diagnostic imaging is leveraging AI to detect diseases faster and more accurately than ever before. From cancer to cardiovascular issues, their AI-driven systems are rewriting how we approach early detection. This isn't just about cutting-edge technology, it's about improving patient outcomes, reducing costs, and reshaping the healthcare landscape. AI is transforming healthcare, and those who invest in it today are positioning themselves in the forefront of a billion-dollar industry. The company's AI technology doesn't just enhance diagnostic speed, it improves accuracy, spotting abnormalities even experienced radiologists may miss. With a digital health revenue growth of 796%, their model is clearly working. AI enables the company to scale its operations quickly while improving healthcare outcomes across its 350-plus locations. The ability to integrate advanced tech into a traditional healthcare infrastructure gives this company a unique edge. It's not just a healthcare provider, it's a data-driven solution reshaping how the world thinks about diagnostics. For investors, this presents not just growth, but a paradigm shift. They're also expanding rapidly. With over 350 diagnostic centers, they have a strong physical presence that complements their technological innovations. The combination of widespread infrastructure and state-of-the-art AI gives them a distinct competitive advantage. As the demand for faster, more reliable diagnoses continues to rise, this company is perfectly positioned to become an integral part of the global healthcare system. Investing in this company means more than financial gain. It's about investing in the future of healthcare. This is not just about riding the wave. It's about creating the future of medicine. As the world shifts away from fossil fuels, renewable energy has become more than just a trend. It's a global imperative. One company, a recent spin-off from a major industrial conglomerate, is taking the lead in offshore wind energy and smart grid technologies. Their projects are not just innovative, they're transformative. With a projected earnings growth of 158%, they are at the forefront of an energy revolution. This is more than a business model, it's the future of the planet. For investors, it represents an opportunity to align financial success with a sustainable, green future. At the heart of their innovation is offshore wind energy. Their turbines are capable of generating power at an unprecedented scale, offering clean, efficient energy to thousands of homes with just one unit. The company is pioneering energy generation that is both powerful and sustainable. In addition to their wind projects, they're making strides in smart grids, ensuring that renewable energy can be distributed effectively across the globe. As governments around the world make serious commitments to reduce carbon emissions, this company is poised to be a critical partner in that transition. While there have been short-term setbacks, like delays in offshore wind turbine orders, their long-term strategy remains solid. With substantial government backing and a well-thought-out growth strategy, the company is strategically positioned to capture a significant portion of the renewable energy market. As global demand for clean energy continues to rise, this company is positioned for growth, making it an attractive investment. This isn't just about generating power, it's about powering a sustainable future. For investors looking to align their portfolio with global trends, this company is an essential piece of the puzzle. No single stock fits every investor. Success lies not just in picking winners, but in building a well-balanced strategy. For those seeking aggressive growth with higher risk tolerance, biotech disruptors are prime candidates. These companies can multiply wealth if clinical trials succeed, but they also carry volatility. Diversifying across multiple names and keeping position sizes appropriate is crucial. Don't go all in on a single breakthrough. Instead, create a layered approach that spreads risk while preserving the upside potential. In fast-evolving sectors, portfolio construction is as critical as stock selection. Risk can't be eliminated, but it can be engineered. For investors prioritizing stability, companies with commercialized products, cash flow visibility, and proven execution offer peace of mind. These firms may not double overnight, but they provide consistent returns with lower drawdowns. Think of them as portfolio anchors, reliable, adaptable, and quietly compounding. Their pipelines ensure continued growth, but their established products ensure resilience. In a market prone to overreaction, holding businesses that deliver predictable earnings is a form of protection. It's not about avoiding volatility, it's about neutralizing it with financial structure. In times of uncertainty, these stocks act as the calm in the chaos, but cash flow only works if paired with control. That's why elite investors obsess over risk management. They don't fear volatility, they prepare for it. Their portfolios are built like teams. Every asset has a job. Equities for growth, bonds for stability, real estate for yield, private equity for asymmetric upside, alternatives for hedging. This is asset allocation with intention. Nothing is random. Diversification isn't just a buzzword, it's protection. When one engine stalls, others keep the system moving. This is how the wealthy sleep at night. They don't eliminate risk, they neutralize it through structure and design. Opportunity doesn't reward hesitation. The 7 stocks we've explored aren't just potential profit drivers, they are gateways into industries reshaping the future. But execution matters. The first step is knowledge. Study earnings reports, examine product pipelines, listen to management strategy. Understand not just what the company sells, but where it's going and why it matters. The market rewards those who go beyond headlines. With clarity comes confidence, and with confidence comes decisive action. Strategy without action is just a dream. The edge belongs to those who prepare, position, and press forward when the signal is strong. Next, choose the right investment platform. If you're outside the US, use brokers that offer US equity access, transparent fees, multi-currency accounts, and clear tax reporting. Start small. Learn how each stock behaves. Don't bet everything on high-growth names. Blend aggressive picks with defensive plays and dividend payers. A strong portfolio isn't built on trends, it's shaped by principles. Know your risk tolerance. Adjust allocation as your goals evolve. Wealth isn't built in a single trade. It's crafted over hundreds of intentional decisions. Make everyone count. Finally, maintain discipline and stay informed. Review earnings quarterly. Reassess your positions annually. Markets change. Your life changes. Your portfolio should evolve too. In investing, success isn't about being right once. It's about being resilient always. These 7 stocks are fast, bold, and future-facing. But you must be the captain. Choose when to board. Choose how long to ride. Choose when to shift course. The journey is yours. Profit isn't random, it's earned through consistency, clarity, and conviction. This isn't just about money, it's about building a future. One choice. One share, one step at a time. Investing isn't about guessing, it's about seeing. These 7 stocks aren't just tickers. They are invitations to join revolutions in science, energy, and technology. This is your moment to move beyond short-term noise and anchor yourself in long-term vision. The future belongs to those who study it, trust their process, and act with clarity. Wealth doesn't favor the passive, it favors the prepared. These companies are shaping the next decade. The question is, will you be a spectator or a stakeholder? The markets won't wait, and neither should you. The next move is yours. Make it count. Make it intentional.